Let's now solve question number 6A from our September 2024 attempt of CA Intermediate Examination. This question 6A is from Accounting Standard 13. Why waste time? Let's start reading. On 1st of April 2023, Mr. Day has 25,000 shares of Squares Limited at a book value of rupees 25 when the nominal value is 10. Further information is given. Let's see at the end what do they want us to do. You are required to prepare investment account in the books of Mr. Day. Okay, let's do this. So I'll open in the books of Mr. Day. In the books of Mr. Day, script name is equity shares in Square Limited. This is variable income based security. So there is no interest date, interest rate, and then what do you say, dividend, all of those. This is basically dividend based transaction. So I would write on 1st of April 2023 opening balance asset, so debit balance. I'll write two balance brought now. How many shares do I have? 25,000 shares. Nominal value is 10. 25,000 into 10 comes to 2 lakh 50, and the amount involved is 25 rupees per share is the cost. So I'll do 25,000 into 25, 6 lakh 25,000. If you want, you can draw another column, dividend column on both sides. I have not drawn because the question doesn't have any dividend adjustment. You're like, yes, sir, I am good at pre and post acquisition dividend adjustment. Just because you're good at it, they won't ask. If they ask, you write it. Yeah, then they've told on 31st of July. What's happening on 31st of July? Directors of Square Limited issued one equity bonus share for every 5 shares held. If you have 5 shares, you get one bonus share. If the shares held are 5, you get bonus shares as 1. On 31st July, you hold 25,000 shares which are coming to you as opening balance. How many bonus shares will you receive for 25,000? 25,000 into 1 by 5, which is 5,000. This 5,000 bonus shares when you got them free. You did not pay any money. So there is no transaction, there would be no journal entry. However, the entry has to be made in the investment account to show for increase in number of shares and increase in nominal value of our holdings. So this looks like journal entry, but this is not. On the debit side, I would write two bonus on 31st of July. I have received 5,000 shares and nominal value is 50,000 up. My amount doesn't change. However, if I am selling these bonus shares, you cannot say the cost of acquisition of these bonus shares is zero and entire sale consideration is profit. No, you cannot. You have to determine the average cost. I would take 6 lakh 25 is the total cost of 30,000 shares. Determine the per cost share value, multiply with the number of shares sold to determine cost, which will in fact help us determine profit to be transferred to PL. As of now, all of this is happening in our mind because we only read bonus transaction. We have not read any sale transaction. Shall I go to next one? After 31st of July bonus issue, on 30th of September, you don't have to be worried to check for interest rate in between because this is variable income based security. Whenever dividend is declared, you write entry, otherwise you don't. 30th of September, directors of Square Limited announced right issue. You knew it, no? After bonus issue, somewhere they'll make right issue, which is entitled to the shareholders 3 shares for every 2 shares. Okay, 3 right shares will be given for every 2 shares held. Let's do that note. 30th of September, if you have 2 shares, you get 3 rights. And for this purpose, when I take number of shares that I hold, I have to include bonus shares also because the right issue is happening on 30th September and bonus issue is over on 31st July. On 30th of September, when the right issue is announced, I don't just hold original 25,000, I also hold bonus shares of 5. So I would write here 30. So for 2 shares, if they're giving 3 rights, for 30,000 shares, they should give 30,000 into 3 divided by 2. We have 45,000 rights with us. Mr. Day has an option either to buy the shares or to sell the rights or do nothing. What is Mr. Day doing? Let's see. The price to buy will be 20. 20 is right issue price. Shareholders can transfer their rights in full or in part, like I mentioned. Mr. Day sold 1/4 of the entitlement to 20 for a consideration of 5. Let me write here. He sold 1/4. When he sold 1/4, 45,000 into 1 divided by 4 comes to how much? 11,250 rights are sold at a price of rupees 5 per share. How much money would we receive? 56,250 rupees what is received. Where do we treat it? See, thumb rule is to write it to P&L. However, if the purchase was before right issue at cumulative right price, immediately there is right issue, then he sells rights, then the price per share drops, because of which if he is facing loss, and if that loss is going to P&L, then he can choose to not write this sale of right value to P&L, instead adjust it against cost. Here we have the shares from the opening date 1st of April 2023. So there is no purchase just before. So what do we do? This entire consideration of 56,250 will be transferred to P&L account as credit income. There is no cost for this rights. Entire consideration is profit. It will go to P&L. We are not adjust this against cost. Will this affect my investment account? No. Why? The journal entry for this is bank account debit to P&L. It will not touch our investment account at all. 1/4 is sold. He bought 3/4. How much is 3/4 of 45,000? 33,750 shares are purchased at a right issue price of, see here, 20. What is the right issue price? So this is just like any other purchase. This is just like any other purchase. We'll write a very simple purchase entry for 33,750 shares on 30th of September. I would write here to bank account 33,750 shares. Cost comes to 3,37,500. I will do into 20. Sorry, 33,750 into 20. The cost comes to 6,75,000. And after this, what has happened? That's it. You are supposed to compute the closing balance on 31st of March. Take the total nominal value 2,50,000 plus 50 plus 337,500. 6,37,500 would be the nominal value total. Amount 6 plus 6, 12, 13 lakh, and you would write 13 lakh here. I would write buy balance carried on 31st of December for 63,750 shares. 63,750 shares, and nominal value will be 6,37,500 and the cost is 13 lakh. This is the end of the question. Easy to do.